please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Reporter's Diary at 6. I'm Ritu Singh. Let's get this show rolling. The Congress party refuses to accept Vice President Naidu's rejection of Chief Justice Mishra's impeachment plea. The government sources hint that a fuel excise cut is unlikely. Reason that maintain fiscal discipline is paramount. TCS becomes the first Indian company to cross the $100 billion mark in market capitalization. Now, the controversial Armed Forces Special Powers Act is revoked in Meghalaya and curbed in Arunachal Pradesh from the 1st of April. But our top story at this hour is GST collections in March, which are set to cross the 96,000 crore mark for the very first time. Those were the key headlines that we're tracking for you at this hour. You're watching CNBC TV 18, and this is Reporter's Diary. Now, the big breaking news from the GST space, sources say that tax collections for the month of March stands at around 96,000 crore rupees as of this evening. Timsy Jaipuria has the details and joins us with more of those. Timsy?
As you rightly mentioned, this is one of the best figures that we've seen under the GST regime on a monthly basis. And let me break this number down for you, especially that the government has received as of now, as of today morning to be precise, about 55 lakh returns have been filed, and government has yielded around 96,000 odd crore rupees as the revenue for the month of March as of today morning. Now, when you talk of the month of March, these are figures which government still feels that could improve and they could be better. Government had expected around 1 lakh crore of revenue for the month of March, received in the month of April. Remember, the last day for filing returns was April 20th, but still people keep on filing their returns with the penalties and with the late fees. However, let me also clarify that about 76,000 odd crore rupees has come as a combination of CGST, SGST, IGST and cess. On the other hand, 20,000 odd crore rupees is IGST from imports. So all in, it's about 96,000 odd crore rupees as of today morning, and the numbers are set to improve. Government feels that there have been past instances where government has taken measures to plug loopholes when it comes to tax leakages. Now the exact impact of e-way bill, which kicked in from 1st April, will be visible in April collections, which will be due in the month of May. So let's see what actually happens. But yes, as of now, government is quite confident and they see that tax buoyancy will come back as it has come back already in the month of March. Back to you.
All right, MZ, thank you very much for joining in. We also have Sachin Menon joining us now for more on this story. Sachin, if you heard Timsy right now, GST collections coming in at 96,000 crore rupees, your first reaction?
Well, I think it is quite expected because the e-way bill system now it is made very simple. At the same time, it leaves no room for evasion as such. So with the e-way bill coming in vogue, I think it will be difficult for evading GST, and naturally this would see a higher collection in this coming months. But moreover that, even those carry forward input credits also might have got exhausted by now, and most of the payments will happen by cash payment. That could be another factor which would push up the revenue collection going forward.
All right, Sachin, stay with us. We're also joined by Mr. Mani from Deloitte. Mani, you also heard, the 96,000 crore rupee figure. Can we get your first reactions to that first?
Yeah, a couple of things. I think last month, many of us had predicted that for the month of March, the final collections would be approximately 1 lakh crore. And I think we had said it on your channel. We had said it in a few other places also. So this figure of 96,000 to my mind is a provisional figure which is up to yesterday. Normally, when the final collection figures get announced towards the end of the month, it is 3, 4, 5,000 crores more. So I'm reasonably confident that this will creep up to 1 lakh crore as on 30th of April possibly, which is a wonderful sign and an indication that the trend of GST revenues has reversed. We are now seeing more of compliance and more of collections, and therefore the next year's revenue target which has been put in union budget now looks eminently feasible.
All right. Mr. Sachin Menon, you heard what Mr. Money had to say. I mean, this is good news. It looks like the cycle's turning. Revenues from GST collections are going up. Do you concur that the final figure could actually look much bigger than this? I mean, as per your calculations?
I think mostly what happens is that the return filing and the payments happen in the last leg of the month. And today we are at 23rd, right?
Yeah.
So we have enough time to get much more revenue, and I'm sure I concur with Mani's point that will have much more collection.
Okay.
And it all probably cross that 1 crore, 1 lakh mark, according to me.
Okay.
So I think that's a good sign.
All right. We also have Timsy Jeparia, reporter who broke that story, joining in now. Timsy, over to you.
Yes. Yes, sir, I would like to just know, rather our viewers would be interested in knowing the fact that will this buoyancy sustain when it comes to April, May and June? Because over the last few months, we've seen tax collections slipping to as low as 80,000 odd crore rupees. And remember, this is the month of March when it's an year-end closing already every year, even in the previous pre-GST regime. March used to be high-yielding months for both direct and indirect taxes. So will this indirect tax buoyancy continue when it comes to April, May and June? Because only if we sustain this 1 lakh crore number, which is an estimate mentioned in the budget as well, is when we could have some more collections coming in, and that will impact on a lesser compensation to be given to the states. Your comments, sir.
See, I think this is something which will certainly continue in future. And I would just like to point out that in the first month when GST was introduced, July 17, the collection in that month itself was around 93,000 crores. Subsequent to that, because of rate reductions, a lot of compliance changes, the GST confidence dropped down a bit. So we had some roadblocks, but now all of those are over. The reason why I'm very confident the buoyancy will continue is because primarily a lot of anti-evasion measures have been taken. In fact, you would be aware that today they have announced that the e-way bill will be extended to 6 more states, in addition to the states where it has been introduced. So the pace at which the e-way bill is going, the fact that at some point of time there is a committee which is going into whether reverse charge is required or not required, the fact that invoice matching is going to become a necessity, to me signifies that in the coming months also, irrespective of, what happens overall, it will remain very, very buoyant, which is possibly the reason why when you look at the budget documents, there is an expectation that the GST collection would actually be in the region of 1.2 lakh crores per month. And that is expected from April itself.
So my next question is to Mr. Menon. Mr. Menon, if you can elaborate on the fact that given that government is now considering further simplification of return filing, also as we all know that there's a committee on reverse charge mechanism to be introduced for compensation dealers as well, and apart from that, not just this, but government is also considering to widen the net of commodities that have to come under GST. For example, natural gas is under discussion, ATF is under discussion, real estate is under discussion. Do you think that it is the right time for government to get all these things under the tax net so that further buoyancy can be seen? And not just that, apart from this, do you feel that getting in such commodities or such services under the GST regime would actually help in gaining more revenue when it comes to the overall collections?
Well, I think slowly and steadily the system is settling down, and people are becoming more accustomed to the filing and e-way bill systems, etc. A comfort is slowly started building up in the mind of the taxpayers. This itself would improve the compliance level, for sure. Now, the proposed simplification of the returns, etc., will also encourage more people to comply easily, those who are not technically very savvy, because the government is looking at simplifying the processes and technology to make it more simpler than it is today. So it is definitely going to improve the compliance level. As regards the other commodities like natural gas or even petroleum products, etc., as of now, these are those areas where the evasion is minimum. I think it's almost nil because these are the commodities which has a complete first-level taxation and have a collection system which is very, very foolproof. So by adding those to this, of course, the revenue will shift from under the account of VAT collection to GST collection. But by including those, I don't think there will be buoyancy in the revenue, except in case where there is a increase in the rate of tax. But it would be good to see that there is no other item left out of GST sooner or later from a principal standpoint. But in any case, even otherwise, I'm sure that the buoyancy in the tax collection will continue upwards in the coming future because of all these anti-evasion measures, especially e-waybill, and even though and enforcement officers are examining or checking those trucks, etc. So, end of the day, I think everybody has to fall in line. It's a matter of time.
All right, Mr. Mani and Mr. Menon, thank you very much for taking out time and joining us on CNBC TV 18. We'll leave it at that. The GST collections now coming in at 96,000 crore rupees and expected to increase further to about 1 lakh crore rupees from here. But time now for a very quick break. Coming up, TCS becomes the first Indian company to cross the $100 billion mark in market cap. Details on the other side. Welcome back. You're watching Reporter's Diary. Into the other big story that we're tracking for you, that is IT bellwether TCS has become the first Indian company to hit the $100 billion mark in market capitalization. The tech giant has taken around 14 years since its listing in 2004 to achieve this big milestone. Also, with the surge in its valuation, the Mumbai-headquartered tech giant has raced past the global consulting services leader Accenture as well. Anuj Singhal joins us now with the highlights of the IT major's journey to the $100 billion mark. Anuj, in a historic day for Tata Consultancy Services.
TCS, of course, has hit a market cap of $100 billion. And let's track the special journey of a very special company. It listed, of course, in August 2004 at a market cap of 47,000 crores, which at that point, of course, was $10 billion. And in a country like India, you'll have to take into account that rupee will always keep depreciating. So that also is an important factor. September 2006 is when it first doubled its market cap and hit 1 lakh crores. After that, a bit of a hiatus, but October 2010 is when it hit 2 lakh crores. And after that, again, a bit of a hiatus before it hit 3 lakh crores in March 2013. After that, a very quick fire 1 lakh crores was added in same year itself in December 2013. And October 2014 is when we had 5 lakh crores. After that, the Indian IT went through a bear market of its own. Values were destroyed by a lot of companies. You saw the revenue growth and profit growth fall, but TCS found its mojo back and in Jan 2018 hit 6 lakh crores. Today, of course, hit 6.8 lakh crores, easily crossed the $100 billion. What if you had invested in TCS's IPO, 1 lakh shares? Today, the value would be worth 16 lakh, a bit more than that actually now, and dividend also 21,000. Most of it, of course, is tax-free. Now, the key point here is when TCS listed, Infosys was the bellwether, and for good reasons, because it had created wealth so many times over. That, of course, would always remain the case with Infosys because it listed at a market cap of less than 1,000 crores. So TCS listed a 25% discount to Infosys, and it took 6 years for TCS to catch up with Infosys. But after that, there was no looking back. It just kept gaining momentum and kept gaining size. In fact, now it's 2.5 times of Infosys. And in fact, if you take into account the entire IT pack in India, all the IT stocks put together, even they can't match up to TCS. TCS is now 52%. Infosys, of course, 20%. HCL Tech, Wipro, and Tech Mahindra making up the rest of the IT pack. But truly phenomenal. And just one more point. It says a lot about the corporate governance standards as well for Tata Sons and Tata Group. They recently sold stake at 2,800 per share. And after that, you have seen a 17-18% rally. And of course, great results as well. So big salute to TCS from the market, $100 billion market cap.
Well, here's more from the man himself who spearheaded this IT giant in its formative years and now heads the group as the Tata Sons chairman. Hear out N. Chandrasekaran, who says that achieving this milestone marks the start of the next big run for TCS.
The digital transformation is going to be the biggest opportunity, primarily because there is going to be more technology in every industry, whether it's a B2B industry or a B2C industry. So we have been making these commentaries and also parallelly investing and building capabilities and being ready for this adoption cycle. And this adoption cycle is gaining momentum. And I mean, if I may say so, I think it's the start of the next big run for TCS.
Well, we'll continue to take that story forward. Reema Tendulkar joins in now with an analysis of TCS's valuations versus the performance of its peers.
It's the growth versus valuation conundrum once again facing investors of TCS. Anuj just pointed out how the market capital of TCS is 2.5 times that of Infosys. Yes, growth has been much higher than Infosys if I look at it on a compounded basis since the time it's listed. So whether it's in rupee revenues or even in terms of the profitability. But valuations are now trading at a significant premium. TCS's valuations are 20 times F520 PE. Now historically, TCS has even seen higher valuations. It's seen valuations of 25 times, but that was in the dot-com era when growth was also higher, 25-30%. The last time TCS traded at close to 20 times forward multiple was, say, in 2013-14 when growth was higher at 13 to 15%. But now we're talking about a growth of roughly about 10%. So same valuations as it was, say, about 5 years ago, but growth is now, the growth numbers are much lower. But today we're celebrating TCS hitting $100 billion in market capitalization. So let me run you through a few factors which are aiding the optimism. One has been the bullish management commentary on banking, financial services and insurance, which is about 32-33% of their overall revenues. Secondly, on account of that, Street sees the possibility of even double-digit growth, a 10% growth in constant currency, which would compare with 6.7% that it had in the prior year. Rupee depreciation can aid at the operating level at a time when other levers like utilization, offshore metrics may have peaked just for the near term. And fourthly, the company has been continuously making digital investments and reskilling all their employees in digital skills. So there will be no one-time margin reset, something that we saw in the case of Infosys. But yes, it's trading at a big premium to Infosys, about 25-30 times. This is despite TCS, revenues being 75% more than Infosys, but it's the valuation growth conundrum facing TCS.
All right, Reema, thank you very much for breaking that up for us. But speaking of the Tatas, there's a key announcement from the group today. Tata Sons has appointed former Foreign Secretary S. Jaishankar as the Tata Group's president for Global Corporate Affairs. He will report to Tata Sons chairman N. Chandrasekaran. Well, it's time now for a very short break. Up next, impeachment motion against Chief Justice of India Deepak Mishra takes a new twist. We'll tell you more after this short break. Welcome back. Now, the Rajya Sabha chairman M. Venkaiah Naidu has rejected the Congress-led opposition's impeachment notice against the Chief Justice of India, Deepak Mishra. Naidu, in its order, said that he held extensive consultations with legal luminaries on the matter, and he also went through comments made by former Attorney General and other constitutional experts in the matter before arriving at a decision. For more on that, we're joined by Ashmit Kumar on the phone line. Ashmit, take us through exactly on what grounds Naidu rejected their notice.
To fast-trace action list, just on Friday we had the impeachment motion being floated, and today we have the order coming in from the Rajya Sabha chairman himself, whereby he's unequivocally rejected. The order is quite scathing. The order says that this impeachment motion erodes the faith in the system, that as of right now it's illegal, it's undesirable, and it's improper to have an impeachment motion being moved against the Chief Justice of India. The ground essentially that has been cited, however, by the VP has been that as of right now, the only ground available to impeach the judge would be proved misbehavior, and that the signatories to the impeachment motion have not been able to manifest those charges, have not been able to prove those charges, and hence there is no case made out for proved misbehavior. And hence on that ground we have an order, a written order, a 10-page order, which clearly says that this motion is not being allowed. Now, as far as the road forward is concerned, we had a press conference this afternoon by Kapil Sibal himself. He's clarified that this order that has come out, in his interpretation, this order is illegal in nature, it is hasty in nature, and that it is ill-advised, this order, and that they will be taking the course of legal remedies. They will be challenging this order before the apex court. But what's critical here is that given that the impeachment motion is against the Chief Justice of India, through the press conference itself, Kapil Sibal has already made his expectations clear that he would expect the Chief Justice of India to maintain arm's distance. So all eyes now on if and when Kapil Sibal makes that move before the apex court. Back to you.
All right, Ashmit, thank you very much for joining in. Now, the Congress has said that it will move the Supreme Court against Naidu's order. BJP Subramaniam Swamy and former Solicitor General Soli Sorabji also reacted to this development. Let's listen into what they had to say. Well, we'll play that bite for you in just a bit, but it's time for a very short break. We'll be back with more news and updates right after this.